Monday. Greetings to you. If you are in the morning or the afternoon, we're delighted to have you. I'm so excited about this presentation. We canvass all of the American Horse Council's members and stakeholders regularly, and this was a really hot topic: top 10 finance and accounting issues facing associations. So I'm so delighted to have my friends from Aprio with us. So let me first introduce you to Greg. And Greg has been with them as the National Nonprofit Segment Leader and has more than 20 years of experience specializing in financial statement assurance and consulting matters for foundations, associations, and nonprofits. So with that, Greg, I'll let you introduce your colleagues and we'll get started.
Yeah, well, thank you, Julie, and thanks for having us here today. We're excited about this also. We worked together as a team here, and we pulled together the top 10 that we're hearing lately from the boards, from management and associations. So we're happy to go through that with you all today. Happy to work with Julie. Hi, Julie. We've been working together for a number of years now. It's fun, and we've done some presentations together about over fraud and what does that mean to your organization. So that's always been a fun one too, that we've done in a number of occasions, live and in person, and that's always a popular one. So always appreciate speaking with Julie on that subject matter. But glad to be here. I'll let Colleen first introduce herself, and then I'll turn it to Anna to introduce hers, and I'll go through the agenda for today.
Well, thank you all for having us today. I'm Colleen Smith. I've been doing nonprofit consulting for 13 years, just joined with Aprio recently, so very excited to be here. I've been with not-for-profits, though, for my entire career, first as an auditor, and then I worked at National Geographic for quite some time, and then have been doing consulting since. So excited to talk about these risks that we see and how we see mitigating them. Anna?
Hi, everybody. I'm Anna Helfin. I am a tax manager here at Aprio. I've been with the firm for almost 3 years now, but I've been in the nonprofit tax compliance space for over a decade. And that's helping organizations get their 501c3 or whatever status at the beginning through regular normal tax compliance, having discussions about unrelated business income and other things, tax implications as new legislation gets passed. So very excited to talk to everybody. And yeah, thanks for having us.
All right. So today we brought up the top 10 finance and accounting issues facing associations. So again, we got together and decided what are the most recent things that our boards are talking about in associations, and where they're where does management have a lot of questions around. So yes, exactly. Julie wrote in a note that please have Q&A. We'll be glad to answer those as we go. Love to answer any questions you have over this. You'll see some ones that I feel like we've been talking about for years, and some that are more recent that topics that have come up. So again, you'll recognize a couple of these: management of cash and investments. I'm going to dive into that a little bit here in the beginning. From both spectrums, those that have the cash and investments, and what do we do with it now, and those that are always looking to have to have a tighter control around the management of those cash resources. Fraud and cybersecurity concerns. Seems like we've been talking about that for years, but it keeps growing to be a concern. The rising costs and inflation, lobbying and political campaign activities, tax and other regulatory compliance. We'll talk about the big, beautiful bill also. The remote and hybrid working. It seems like we've been talking about this for a number of years, but it still keeps on coming up. Are we keeping space? Are we downgrading our space? Are we just going to a remote work environment? We'll touch briefly on the internal controls and process efficiency concerns. We'll get back into tax with UBIT, and then we'll finish up with some lack of proper strategic planning and budgeting, and poor financial reporting, and some ideas around improving those. So to kick it off, I'm going to start out with management of cash and investments. So again, this rises all over the place when I'm dealing with associations. I definitely have associations that are looking at how are we looking on a day-by-day basis, week by week, maybe month by month, of making sure that we're hitting cash flows. So here we go into, pretty detail with our associations of what are the best practices to manage cash flows, developing the weekly and monthly forecasts, create a listing of contracts, sometimes getting a contract management system rather than just an Excel spreadsheet, understanding how much is coming through those expenses and the terms and when are they all due. As we know, cash is influxes come and go throughout the organization. So how do we plan for those? Then I have some associations that say, okay, well, we do have reserves. We do have 10 or $15 million or more of reserves, but now our association members are hurting. We're going through a specific time. And I think, I've had this conversation a number of times just in the last like 3 or 4 months that says now's the time for our associations to shine. Some of our members are really going through some tough times. There's regulatory issues out there. There's cash flow issues out there. There's rising costs. So what are we doing for our members? And maybe we have a little bit build up of reserves. So is it time now to invest in certain things or to reduce certain costs to make an investment back with our membership? And so the board is really struggling with those or bringing up questions around, okay, what can we do for our members right now? We've been saving it for a rainy day fund. Is it starting to sprinkle? Is it starting to rain a little bit here? And do we need to look at those reserves and do special projects, making sure that we're out there with our members and seeing how valuable our association is right now. So those are a lot of the discussions that we're having around those cash and investments right now. If you want to go to the next slide, this is over the investments themselves. Again, just a reminder, I know you're probably all over this with the investments, but a lot of times people lose track. They've got their money investment managers that are out there, but are we really looking over the investment manager, making sure that we have those close relationships with them? Are they presenting to the board? Are they presenting to management? So there's clear communication between the investment managers and the board to make sure that they're investing their funds the right way. I think this is very, again, very important to the members to have transparency there. So any questions before we get into fraud? Did I see anything in the chat?
I didn't see anything in the chat yet, Greg, but I have a question thinking about cash. I hear all kinds of different theories on how much cash you should have on hand. Is it 3 months worth of operating expenses? Is it 6 months? What's the thing going on in the association space these days?
Yeah, that's Julie, great question. We get asked that all the time when we go through our financial statements with the audit committee or the finance committee and the board. They're like, okay, so what's the key number that we're looking for? And I always tell them it's the risk appetite of the board. Are they looking at a 3 month? Are they looking at 6 months? Or are they looking at least a year or 2 years worth of reserves? And it really comes down to, where does the board feel like they need to manage risk? Where's their risk appetite? Some think it's 3 months and they feel like they should keep giving it back to making sure they're doing membership programs, and that's all we need. But typically I see around a 6 to 12 month reserve that the associations usually have. So it is all over the place, but it is a good conversation to have with your board members or your finance committee members.
I think back about what we experienced during the pandemic, where we had a lot of associations that maybe didn't have the reserves and they were struggling with, what they were going to do. So I think we learned a lot from that experience, and I'm hopeful that means that boards and their C-level folks have gotten a little wiser and think a little more strategically about how they manage cash and investments. So if we were to have another uncertainty event, then we would all be in a little better situation.
Yeah, and I think we've learned a lot through that. You're right, through that time period, and then maybe some associations have started building up those reserves too, and then they're like, okay, so maybe we have 2 years now, or how much reserves do we need before we start investing back into projects, as I was saying earlier. So But it's always a good discussion because you definitely want to weather the storm as we all felt it through COVID, and a couple of our associations were like, wait, how do we make this thing work? We don't know if our revenue is still coming in, and where do we need to cut expenses? And that's never a great spot to be in. So it's always good to have that build up there to at least be able to maneuver when things happen. So.
Well, I know I have a colleague who gets a lot of his annual revenues from his conference. And when we went through COVID, he couldn't put on his conference, so he didn't have that revenue stream there. So he had to really navigate. And I know there are other smaller groups out there, state horse councils, that put on expos or have other events that they couldn't conduct. And that really pinched a lot,
Yeah. Yeah. No, the whole meeting revenue and then insurance, right? We never knew if it was actually going to come through. There was always exceptions in there, and were we able to recover any of those funds? A lot of associations were not able to recover some of those. So it was maneuvering, in real time. How do we get our money back for certain things? But obviously that revenue was not coming in. So hopefully, hopefully we won't have to go through that again, but there's always something out there. So, moving on to the fraud and cybersecurity concern, Julie and I, again, talk about fraud. We could talk about this for an hour and a half and going through all the different scenarios of where fraud can happen. Here, our focus is more on external fraud, right? The cybersecurity. We get so many questions around cybersecurity. How can we prevent it? We feel like we have our managed service providers, but do we really understand what they're doing with our IT systems? And if you want to move it to the next page, we talk about that a little bit here. Not-for-profits often lack in a way to evaluate the cost effectiveness of IT, like cyber costs, cyber insurance. What does it cover? How much should we be paying? It's very confusing. And it's like, am I really covered or not? And is our managed service provider giving us the right amount of service that we need and right enough coverage? And are they covered if something happens? I always feel like this is what keeps a lot of CFOs, CEOs, board members up at night about their organization. They just don't know. So if we want to move to the next page, some of the things that we were talking about with some of our association is just some easy blocking and tackling, maybe some protection that you can do, and this makes the board feel better, management feel better, right? The CFO, CEO's got to feel good about, okay, let's get somebody else to look at certain things. The cyber health check is a very popular one that a lot of associations do, just to get help and assess their cybersecurity approach, and then identify any of those gaps that you might have, that you have with your IT systems. And it's very cost effective, but it's nice to have somebody else to come in and just say, hey, I got this managed service provider. He's telling me he's covering it all, but am I really covered here? Or is there something else that's a gap that could bring a risk to our organization? So we always feel like it's a good check to have some independent knowledge to come in and take a look at that. Now, there's two other services that you can get that are more larger and a little bit more in depth. There's a risk assessment, looking at your investments and evaluating different options that you would have in insurance, and just making sure that your investments are there, and taking a deeper dive into your IT systems. And then a larger one, just an ongoing monitoring of cyber security controls. So again, there's ways around this to make sure you feel comfortable, but it's always nice to have that independent look to make sure that you got a health check on your cybersecurity.
So Greg, there's a question in the chat about background checks. Should associations, nonprofits, foundations be doing background checks on new board members, especially the treasurer or the president? What about conflict of interest statements that might be needed for boards or committees, that kind of thing? How does that fit into the whole security conversation?
No, I think background checks are important, and people are getting pushed back. You might hear a little bit of grumbling about that, about employees or board members, but I think it's so important to get those background checks. In fact, taking on new audit clients, we're doing a bigger background check on board members, CEOs, CFOs, and again, it's nothing to be concerned about. You're protecting your organization. So I don't think anyone should be pushing back that hard on these background checks, especially if they're in a finance role, right? Especially a treasurer or president or CFO. That should be automatic that you're doing background checks. What was the other question, Julie?
Oh, my question was about conflict of interest statements.
Oh,
I know
yeah.
right now I'm reviewing mine that we have our board members sign. We haven't historically done committee members, but in these polarizing times we're in, we've decided that perhaps having our committee members also sign a conflict of interest might be worthwhile, just so that we're certain that all our members and the organization are speaking with one voice, and we're not getting conflicting things going on. So just curious.
Yeah, no, we had a huge project with an association that had some conflict of interest. They just didn't identify them. And now the trust of the membership is wavering. Even though there was really nothing there, but it was just, oh, you're dealing business with my company, who I'm the CFO of, but everything was up and up, but it was just not disclosed properly. So it's okay to have conflicts of interest. It's just to be transparent about them. It's about voting on them, right? Having approval for them and making sure it's just very transparent. So again, you expect to have some conflict of interest in there because most of the members are, into their organizations and they want to run for the boards and they're doing things and their companies are doing things for the organization. So again, I think it's good for committees too. I think it's board, I think it's committees, anyone that's making some decisions around the financial health or where the organization is going. You want to make sure that that's been documented and the conflict of interest are vetted out and that no one feels like they're doing it for their own self-interest rather than the interest of the organization. So, but yeah, thank you for those questions. It was very good and hot topics that we're talking about. I'm going to turn it over to Colleen to talk about cost and inflation.
Yes, thank you. So, I think this is what we hear in the news all the time. There's so much uncertainty, economic pressures out there. It's hitting every sector everywhere, but it also hits our not-for-profits and our associations. It can touch every aspect of operations. And I think the biggest area we see the biggest impact is in salaries, because that's one of the, if not the largest cost for most associations. And with the cost of living rising and then the cost of healthcare rising, the associations are bearing that cost. And then we know that in order to make up for it, you're either not doing what you want to do for your membership, or you have to raise member dues, but your membership is also facing the same issues. So this can be a cycle that is frustrating. And what can you do? Because it's outside of us in some realm, but to what you can do to mitigate it, working, if you have vendors that you work with on a routine basis that you're going to continue to work with, whether it's we were talking about conventions and conferences and you have it at a specific venue, or you could have it at a specific venue and maybe lock in some pricing, or lock in, down the road this year's rate or something like that. Or you have a technology provider. Technology costs are always on the rise. Is there anything you can do to negotiate with them to set a longer term contract and get some longer, locked in rates? Supply chain concerns. Not too many not-for-profits have concerns about that, but maybe your members do. So what can you do there to ensure that you either diversify your vendors and have options out there, or what you can do to make sure that supply chain isn't drying up or you don't have to pay a premium? And then we've already talked about reserves, but reserves are important. And the impact of COVID may have depleted your reserves, but it's important to have them on hand, and so that you can make sure you are meeting the bare minimum there, the salaries, and what I say, to keep the lights on. Budget constraints is also another way to deal with this. I think the issue is many of our nonprofits and our associations are already at bare bones or feel like they're at bare bones, so it's hard to cut anymore. But I think that if you can, you should, or consider not doing anything too risky during this time period when if you don't have the reserves on hand to cover you if things don't go the way you want them to. So I know that the world is dealing with the rising costs and the inflation and how to grapple with them, but these are some thoughts on that.
Colleen, many of our members of the equine industry are really concerned about the impacts trades and tariffs are going to have on them, whether it's importing a horse or purchasing your next horse trailer, something that involves aluminum and steel, those kinds of
Sure.
things. So we've done a whole little special call out on our website, folks.
Great.
So if you want to know more about how trades and tariffs affect the equine industry, check that out on our website. And we're always here to answer questions about that. But that does become a factor when we think about budget constraints and what does that mean for us?
Absolutely. Absolutely. Yes. I actually live in DC, so I hear these conversations about tariffs and whatnot happening, and I think everyone's grappling with the same thing. So that's wonderful that you have some ideas for your members. So I think we're moving on next to over to you, Anna. Sorry.
No problem. So let's talk a bit about lobbying and political campaign activities. I think many organizations use these terms interchangeably, but the definitions are important as some activity is not allowed, depending on how the organization got its exempt status. So let's start with political campaign activities. These are activities that support or oppose candidates for public office and consist of any direct or indirect expenditure made to support those activities. So this could be a payment, a distribution, a loan, an advance, a deposit, or a gift of money or anything of value. Political campaign activities do not include any activity to encourage participation in the electoral process, such as voter registration or voter education, provided that the activity does not directly or indirectly support or oppose a candidate. Lobbying activities are those intended to influence foreign, national, state, or local legislation. Such activities include direct lobbying and grassroots lobbying. Tax-exempt organizations that are categorized as 501c3s are generally permitted to perform some amount of lobbying activities, but they cannot be substantial, and we'll get to that in a second. Direct lobbying is when a nonprofit incurs expenditures in their attempts to influence any legislation through direct communication with a member or an employee of a legislature or similar body, where the principal purpose is to influence legislation that has already been introduced. Communication is considered direct lobbying only if it refers to specific legislation and reflects a view on such legislation. A communication is not a direct lobbying communication if it is concerning action by the legislative body that might affect the organization's existence or tax status, as opposed to merely affecting the scope of an organization's activities. So some examples of direct lobbying include sending letters or publications to legislators or public officials relating to specific legislation that has already been introduced, meeting with legislators or public officials regarding specific legislation, and then calling legislators or public officials regarding specific legislation. The other part of lobbying is grassroots lobbying, and this is attempts to influence legislation through an attempt to affect the public opinions of the general public. Communication is considered grassroots lobbying if it refers to specific legislation, reflects a view on that legislation, and then encourages recipients of that communication to act. So some things to keep in mind is if you have things that say, call your legislator, or here's your legislator's contact information, or here's a petition or tear off material to send to your legislator, those type of calls to action would be considered grassroots lobbying. Any direct mailers to the public, placing advertisements, issuing press releases, or holding news conferences can also be considered grassroots lobbying. So let's just go through two examples. So we have a director of a 501c3 organization that schedules a meeting with a member of Congress to discuss the challenges low-income individuals face when trying to find affordable housing in their community. As long as there's no pending legislation on this issue and the director doesn't propose any legislation to address the issue, the meeting is not considered direct lobbying. Here's another example. if a 501c3 organization paid for an advertisement in a newspaper or magazine or sent a direct mailing praising a proposed bill but didn't include any of the calls to action that I mentioned earlier, it would not be considered lobbying. So remember how I said earlier the 501c3 organization could do some lobbying provided that it wasn't substantial? The definition of substantial or insubstantial, of course, hasn't been provided by Congress or the IRS, and the line between the two is hazy at best because it depends on how the IRS retroactively weighs the facts and circumstances of a situation. So to avoid any uncertainty of a nonprofit's lobbying activity being measured by a subjective test from the IRS, charitable nonprofits could consider filing what is commonly referred to as a 501h election. And essentially what this is saying is instead of considering this activity to a subjective test, you're going to just measure our activity based on the amount of expenditures that we have. You put it into effect the year that you wanted to take effect, and then it's in effect in perpetuity until you remove the election. And under this expenditure test, an organization that engages in excessive lobbying activity over a 4-year period, and excessive, again, is measured by the amount that you're spending on your lobbying activity, that may be, if it's, again, substantial based on this expenditure test, may cause you to lose your 501c3 exempt status. So just keep that in mind. Organizations other than churches and private foundations can do the H election as an alternative method for measuring lobbying activities. So lobbying is a big thing, and then political activity is its own separate thing. But advocacy is the process of taking action to influence public opinions, policies, or decisions in order to advance the organization's mission and benefit its stakeholders while remaining within the legal limits of lobbying and political activity. So I know that's a lot, so I broke this down into a little bit of a table. This is essentially summarizing everything I said previously. And what's important is that it breaks it down based on what organization type you are. So the first row is for our 501c3 organizations. You'll notice for political campaign activities that it's absolutely prohibited from participating in or intervening in any political campaign for or against candidates for public office. Now, you may have heard recently about a court decision regarding churches being able to endorse candidates from the pulpit. And that's because of since 1954, a provision in the tax code called the Johnson Amendment said that churches and other nonprofit organizations could lose their exempt status if they participated in or intervened in any political campaign on behalf of or opposing any candidate. There's been a lawsuit about this over the years. Essentially, national religious broadcasters and other churches have sued the IRS, saying that it infringes on their First Amendment right, but the IRS rarely enforces the rule. During President Trump's first term, he promised to get rid of the Johnson Amendment, and then in the July 7th, 2025 court hearing, the IRS didn't go as far as to eliminate the Johnson Amendment, but it did say that when a house of worship in good faith speaks to its congregation through customary channels of communication, that is allowed to do some campaigning activity. It's considered more of a family discussion in that regard. So just keep in mind that, you know, there is a little bit of gray area in terms of political campaign activity if you're a church, but otherwise, if you're a 501c3 organization, you are not allowed to do any political campaign activity, which is why it's really important to nail down what is political campaign activity versus what's regular lobbying, and then what's just general advocacy. And then we also have stuff for 501c4 organizations in the second row. Notice that it says that it's unlimited lobbying allowed if it furthers the social welfare purpose of your organization. And then for our C6s, our business leagues or chambers of Congress, our commerce, etc., you're allowed unlimited lobbying if it's related to your exempt purpose. So just something to keep in mind, depending on how you're exempt will determine how much of a political campaigning, lobbying activities, or advocacy that you can do. Any questions on that? I know that was a lot. All right. So ensuring compliance, what's really important here is that you should really maintain a comprehensive master list of all the federal and then state and local compliance requirements. So it's not just every year you file a Form 990 or 990 EZ, you know, depending on what state that you're incorporated in or what state that you might be soliciting contributions from, there might be an additional filing. So it's always important, especially as you expand operations or you're thinking about going to another state, that you take a look at the Secretary of State's website or get with your tax practitioner to see what other potential tax compliance might be in effect as you start to expand your operations. I also wanted to take a little bit of a second here to talk about the One Big Beautiful Bill. A lot of it doesn't really pertain to nonprofits per se, but there might be some things that your organizations might benefit from. For instance, Section 179 expensing, the cap for immediate expensing for business equipment is now 2.5 million, while the phase out starts at 4 million. There's been some renewed and modified deductions. The bill extends several expiring deductions and introduces new ones, such as deductions for tips and overpay and auto loan interest and senior taxpayers. There's been some changes to SALT. The state and local tax deduction, which everyone usually calls SALT, was controversial. It used to be capped at $10,000, and now that cap is $40,000. So just keep that in mind. There's been some changes to some green credits. Some of them have been phased out entirely, or some of them have been drastically reduced. And then there's also been a few other things. For instance, for itemized tax, it used to be that you could only take charitable deductions if you were itemizing your deductions. Now, even if you're taking the standard deduction, you can take a certain dollar amount of charitable donations. This is kind of similar to what happened back in COVID, where you would have the standard deduction, and then there was a specific dollar amount that you could take on top of that for charitable giving. So just something to keep in mind as we get closer to the end of the year and you're asking for our contributions. All right, I think next is Colleen.
Yeah, and Colleen, before you jump in, just as far as the registration and compliance with that, if you guys have any questions at all, like what states you should be filing in, please let us know. We can help you with that, and then we also team up with Harbor Compliance. We have a relationship with them that they can just do a quick little background of where what states you should be filing in. And it's really it's a free service that we're offering out, and just to make sure that you're in compliance in those states. I know we get a lot of questions. We're like, oh, well, we do some donations, we get some donations here. When do we have to start filing, or other activities are happening in different states? So we definitely we can answer those questions for you and help you out with those situations.
Absolutely.
Great. So shifting back to maybe a little less intense, as Anna's is, remote and hybrid working environment. So, the whole world changed in 2020. And while I feel the pendulum shifting back to more in-person working, I still see a lot of remote and hybrid environments. And I think that is, in some industries at least, something you have to have in order to stay competitive and get the people you want. But while we want to allow for convenience and we want to get the best people in, we need to make sure we have strong internal controls still, because, once people are starting to work from their homes or outside the office in general, risk can happen. And the biggest areas we see are in the disbursement process, and, cash collection, and then in managing your expenses. So it's important in each of these that to use technology, but not to lose sight of the internal control process. So making sure there's still checks and balances surrounding each of these processes, even though they may be being done remotely. There are systems out there who can absolutely help with the cash disbursement process, allowing for checks and balances within the system. Expense management is more just keeping an eye and making sure people, because they're home, aren't doing things that they wouldn't normally do if they weren't in the office. And then cash receipts, you want to make sure that there is enough control and segregation of duties around how your cash is coming in and how it's getting booked and recognized and collected on. Because that's something where if you're not watching it, or you don't have the right controls in place, it's something where fraud can happen, and you're maybe trusted the wrong person to be handling it. So I think on the next slide, we talk about, turnover is also a big concern. I think people being able to work from anywhere, it seems like people are deciding to literally work from anywhere and change jobs and move around. So it is important to ensure that you're covered if somebody leaves. What we have seen at times, so what we do a lot is we we go in and help when an organization is in a crisis. They've lost their controller or their CFO, and for whatever reason. And we've found access is a huge problem because it turns out everything was in that person's name and they had all the passwords and no one knows how to get into any of the systems. So you want to make sure you do have multiple people with access to the appropriate levels. And I know this can be really hard in small organizations. So at some points it may require the higher level management to get involved. I have one organization where the president and CEO was the one holding all the keys because they had to fire the CFO. So just making sure that you have that backup just in case. And then authorization authority. This is sort of shocking sometimes when I'm at organizations that this isn't documented and known for, who can authorize a purchase at what level or a contract at what level, and making sure that that's documented and everyone's aware of it, meaning management, the board, everyone's signed off on it, staff, because this is where you see a lot of people sign contracts that shouldn't be signing contracts, and they've locked the organization into something that wasn't intended. And this is again where at small organizations you may have to involve higher level management in lower level decisions, or even board members. I certainly have organizations where the treasurer signs off once we hit a certain threshold. So just that's a really important control and something to keep in mind. And then go ahead.
So I was just going to say for fun, Colleen, in case anybody out there is interested. So at the American Horse Council, I sign off on all invoices, but I have an independent accountant that also has to sign off. But when I reach a certain threshold over $5,000, I have to go to a board member and have them sign off. So we've got multiple tiers that we do.
Mhm.
And also I would say that when we started embracing more of a remote hybrid work environment, I had to do a little training with my staff to say, I'm never going to email you and ask you to buy a gift card for me.
Right. Oh, absolutely.
Or those kinds of things, and really spend some time talking to them about things they should and should not click on. Like this email comes and it says, "Hey, we got this question. Click on this." And like, no, let's let's all be well aware of what could be something that could get into your personal computer or your system that could have an impact on the organization. So just for what that's worth.
Absolutely. And that's where the cybersecurity overlaps with the remote environment, right? Because in an office space, you absolutely would have walked down the hall if you wanted someone to buy a gift card, right? Or they would have came to you and been like, you really want me to buy this gift card? But in a remote environment, not as much paying attention to that. And that actually just happened in my husband's office a few weeks ago for an intern. So don't even discount who might think that. So that, they didn't train the intern not to fall for that, but it turns out the intern was the one who fell for it. So, really appreciate you bringing that up, because that is something that is prevalent everywhere and everyone's getting hit with that. So appreciate that.
We always say cybersecurity, training,
Yes.
just every 6 months, it can be short, but it can be just keep a top of mind for everyone in your organizations. I mean, this is 99% of the fraud that comes through is because it happened from internal, not following your internal controls, policies, letting it happen from the inside, letting the external fraud come in. So it happens. Even though I feel like we talk about it all the time, it's still happening to organizations, and it doesn't just happen to interns, right? It's happening to everyone. Right. So it's a big deal. We see hundreds of thousands of dollars leaving organizations because of this. So please, just blocking and tackling again, having that training done is so important.
And it's really important too that your AP or whoever is responsible for issuing payments is trained. We've seen a lot of fraud lately with somehow they intercept the email to the supplier about their banking, and then they write back pretending to be the supplier or the vendor to change the banking information, but really it's fraud. So we always encourage people to make a phone call to someone from that vendor to talk to them about this, to make sure you have the right information there if they're asking for a change. That's another one we've seen happen repeatedly. So while turnover is a big risk, I think what we've seen worse over the last year or two, I think, Anna, on the next slide, is the recruiting and finding good staff. It's really hard at not-for-profits where, the pay is usually lower but there's still so much work to be done. So to address these, we recommend, finding ways to set the organization apart from other organizations to find out why, to appeal to people why they might want to come work there, which Anna, I think those are on the next slide. Just talking about, your mission and the impact that you have on an organization and appealing to that. Maybe you have unique benefits. Maybe you give a week off in the summer to staff, or you give the week between the holidays off, or something like that, something unique that sets you apart. Invest in professional development and training, showing them that you care about them, giving a work-life balance, if possible. Again, we just said burnout and working too much, but can you give that work-life balance? Using social media to find the right people, appealing to the right people. LinkedIn seems to be where a lot of people are getting their jobs and looking for jobs these days. And then building a strong workplace culture, despite maybe being remote, being somewhere people want to be and want to work and be part of a team. And we find those are ways to maybe set yourself as separate from other organizations, and appeal to the right people. I think I go right into internal controls and process efficiency. So this is probably my area that I enjoy the most. I think that, it is important while you're focusing on not spending too much money and cutting back and everything, that you still keep your internal controls in place and you make sure you have good ones in place, because otherwise that is going to burn you and cost you more money than if you had kept them in place, whether it means having the right staff or getting more in the details than you want to. But it is important, and it's hard at associations that are smaller to have these divisions, but it is good to keep these things in mind when you're looking at them. And then efficiencies, is your finance and accounting group efficient at what they do? Are they using technology to the fullest? A lot of organizations implement a new technology either during or after COVID, and are doing better because of that. So that's great. But we see a lot of organizations who are stuck in how they've always done things, and they just keep doing it that way. But really, you're costing yourself more money because of the inefficiencies and the extra time that things are taking. So we really do enjoy looking at processes and procedures and helping an organization figure out how to do them better. I think telltale signs that things are in trouble, if you have to keep asking where a payment is or whether a payment's gone out the door. Payment processing should not take much more than a week or so. So if you're asking repeatedly about the same vendor, something's not right. And the other thing is, how long does it take them to close the books and to get you some financial reporting? I feel like most associations, you should be able to close the books in about 10 business days. And if it's taking a lot longer than that, then they're probably doing something they shouldn't be doing or don't need to be doing, or are just not focusing on it the way they should be. And, are you getting reporting? Are you getting regular reporting that makes sense to you, that helps you manage the organization? So those are areas that if you don't pay attention to them, they can really creep up on you and cost you a lot of time and money and effort down the road. So now I think I'm back to Anna for more tax.
Well, before Anna goes, there was a question. Do you have examples of technology that can help?
Oh, sure. I mean, yeah, we have lots of disbursement technology that I think is, bill.com, AnyBill, those types of things that really do make the AP process just so much more efficient and easier. There's, depending on your size, there's general ledger ERP tools that will talk with your CRM and make that process much more efficient and aligned. So really, are the systems talking to each other? And then cash disbursement tools, I think, save tons of time and money, and also protect you against a lot of the fraud that could happen otherwise. I'm blanking on other tools that could be out there, but it depends how big you are. There's closing tools. There's a lot of technology out there. Sorry.
So Colleen, I'm just going to give a big shout out. We use bill.com. And not only does it make my process much more efficient, but it makes my audit go so much faster.
Yeah.
Because
give them access, and then
everything's in there, and it makes it easy to find what we need, and we're not doing documents and that kind of stuff. It was well worth making that.
Absolutely. That's a great example of doing AP the old way, right? If you didn't want to invest in the new system, but really it's saving tons of time and money now that you have it up and running. So great example. Thank you, Julie.
All right. So as we've been alluding to, there's been a lot of changes and uncertainty in the non-for-profit space. And so some organizations are trying to explore different ways to get more revenue into their organizations, not just through contributions or the programs that they put on. So sometimes people will make additional investments. And the number one question that I get all the time is this unrelated business income? So there are 3 criteria where it comes to unrelated business income. It has to be income from a trade or business that's not related to the mission of the organization, and it has to be an activity that is regularly carried on. That means per the IRS that it would be shown in a frequency and continuity in a pursuit in a manner similar to if this activity was happening outside in the real world. So here are some examples of things that cause unrelated business income. If you have debt finance rental income, by that I mean if you have a mortgage on a building and then you're renting out that space to tenants, that's an unrelated business income activity. If you have dual use facilities, part of your facilities is used for your mission, but then other part is used for, like, for instance, making macaroni, and you guys aren't a macaroni nonprofit, right? So that would be dual use facilities. Advertising, when we say advertising, we don't mean sponsorship where it's like, hey, if you pay $5,000 for a table at my gala, I'll put your name in the back of my program. This is saying that, ABC widgets are the best widgets in the world. Call, 8675309 for the number for these widgets. So you're actually endorsing a product and putting an actual advertisement in your materials or gala things that you send out. Sales of insurance is unrelated business income. Sales of membership list are any income from an S Corp investment is unrelated business income. But if you have like a partnership K1, we're just specifically looking for, there's a code on the K1 that you receive every year, or sometimes it's found in the footnotes that will say exactly that this is unrelated business income. So not all the income from a partnership might be unrelated business income. It might be just a few items off the K1. If you have non-member income, so this is really talking about like, our clubs, our golf clubs, membership clubs, those type of things where you're receiving fees from like me, average Joe, walking into your facility and ordering a meal versus, a member who pays you dues and then they are also getting meals. So the member meal would not be unrelated business income, but me, average Joe, walking on the street would be. Income from a controlled activity is also unrelated business income. And then gaming potentially, and I say potentially because there are some exceptions and exclusions. So some exceptions are a volunteer workforce. And that's when labor for the activity is significant, but 85% or more of it is coming from volunteers. And it's important when you're doing that count to count all labor, including contractors. So for instance, if you had a game and you were like a Pee-wee football team and you had like a vending, you were selling baked goods or whatnot. If the majority are coming from like your boosters and not people that you're paying to man the booth, that would be considered a volunteer workforce. If what you're selling is mostly donated goods that you're getting from the public, think of your Goodwills or your consignment shops that way. And then also convenience of members. If you have a cafeteria on your campus and it's really there just to keep students on campus, then and you're not like advertising, steak meals against the average Joe, down the street, that would be considered convenience of members. There's also some exclusions: investment income, interest, dividends, capital gains. Those are usually excluded from unrelated business income. Royalties are usually excluded from unrelated business income, and then rents. But again, notice the asterisks, which it could be tainted by debt financing, which, as we mentioned in the previous slide, is unrelated business income, because then you're kind of getting into the same business as other tenants or landlords in the area, because you would have a debt finance property through a mortgage. Again, I could probably go through a whole doctorate dissertation on what's UBIT versus what's not UBIT. So I kind of broke down this table, like, a situation when it would be exempt and then a reason. So classic example is, let's say I have a museum shop and that museum shop is selling snacks or sodas or I Heart New York City t-shirts. Those are like, for instance, if they were selling like Manchester United, jerseys at the museum shop, that would be unrelated business income because they could go to Nike or the bodega down the street or whatever and get, those sodas, those snacks. It's also not related to your mission. But if the museum shop was selling, souvenir sculptures from an exhibit, or if they had like, their logo on a shirt and they were selling it, that is related to your exempt purpose. So depending on, how something is structured or what the situation is could determine if it's unrelated business income or not. So it's important to be proactive when you're thinking about getting into these activities, to have a discussion about, is this unrelated business income, is it not, and then documenting that, so that way if the IRS were to ever challenge you on it, you would have documentation that you've already considered this and have done X, Y, and Z research, and this is what you're basing your conclusion on. So that's all I really had for unrelated business income. Again, I could talk a lot more about this, but that's at least enough to get you started.
Yeah, thank you, Anna. I mean, we get obviously questions on that all the time. It is very complex and confusing. I'd say we sit through hours of CP on unrelated business income, and I'm still maybe confused on on exactly what it is. And it really dives into the very details of what you're doing. And I think before you sign sponsorship contracts, just make sure that the contract is written appropriately, that it says the right language in there before, talk to your tax accountant before you do those things, just to make sure you're not putting language in there that would make this unrelated business income. There's certain words that the IRS will pick on and say, okay, this is now you said this. Well, now it's unrelated business income. So, Anna, did you want to say anything else about
No,
that?
that's exactly right. Nodding my head
Yeah.
in agreement. Yeah. Make sure that you're talking to somebody before you sign anything.
Yeah. It's you don't want to get trapped in a spot where it doesn't need to be unrelated business income, and now you have to claim it. UBI isn't horrible, right? You're bringing in revenue to your organization, so I mean that's not a bad thing. You just got to make sure you're paying tax on it if it's proper to pay tax. But if you can avoid it, obviously you want to avoid it if it's just language change in some of your contracts. So again, that gets brought up a lot. I know we only have a couple minutes here left. I had the last 2 points we had in here was strategic plan and budgeting, and then your financial reporting. I think these two go together very nicely. A lot of non-for-profits, it's just hard, right? We lack resources on appropriately budgeting and doing strategic plans. As you all know, this is very important to the organization. On doing these thoroughly and doing them, yearly, that you're taking a look at these things. Again, I'm big on transparency. Julie, you brought that up about conflict of interest, background checks. I think the budgeting and strategic plan is all about transparency to the donors, the stakeholders in your organization. It just lets them see inside the organization, hey, this is what we have going on. This was in the budget. This was planned. This was approved, and this is how we performed against it. It's a great way for risk management tools too. Here in the next couple slides that we have up, with again, I think everyone knows about these, but it's good. We want to put these in slides so you guys could take those back and just think about, are you doing this in your strategic planning? Are you're doing a SWOT? Are you doing a SMART? And then are you getting out KPIs and looking at those and measuring those? Obviously that takes time, and but I think those are important as you go through that, the strategic plan. And then as far as budgeting, again, you want to make sure that aligns with the strategic plan. You want to involve everyone in it. It's just not one person that's developing the budget. It should be the board members and staff to make sure everyone's buying in, because you don't buy in, as we all know, everyone's going to be fighting it all year long. So make sure it's bought in and well communicated. And then the last slide we have here is just financial reporting. Colleen, I loved it. I was waiting for you to say this, like, how long should it take for an association to close their books? And so I was waiting for that 10 days to come out from you. I think that's awesome. Yeah, if you can close the books, but a lot of associations sometimes struggle with that, and it might take a little bit longer. But again, it's so important to be closing the books on time so you can make management decisions on what's happening. You actually know in real time what's going on. Sometimes, we're 2-3 months behind. I hate to say that, but a lot of associations do get far behind, and they're trying to do bank reconciliations. They're trying to figure out, closing books, and they're looking at old information. And that's never good for anybody, and especially to the board. So, there's ways that you can set up your system, especially with technology today, that helps close those books faster, helps with board reporting too. And just say, okay, this is how we ended up, close the books, and then here's a report that was going to be consistent every month, and that gets pushed out to the board. And that can do, graphs and pie charts and all sorts of things that, because the board, sometimes you lose them when there's a lot of words and a lot of explanations out there. But if they can see, okay, here's some information out there that's easy to digest, and we find that to be very helpful. So again, we help associations with some of that reporting and getting that out there. I just think that helps the boards and helps management explain what's going on a little bit better. But again, timeliness and accuracy, it always comes down to that, and getting things done and getting your audit and review. That's always important too, to get done soon, soon as you can close your books and get them in there and get that reported out to the board. I think that's helpful. Julie, we're up against the 2 o'clock, so I want to turn it back over to you and say, our goodbyes.
So we really appreciate Greg and Anna and Colleen making themselves available. They've shared their contact information. We've recorded today's session, so you can listen to it again. And you've got a way to reach them. If you've got some follow-up questions, feel free to reach out to me, and I'll be happy to help you with any of that. I want to do 2 things before we drop off. One, which is to thank our sponsor for today's webinar, and that's C. Jarvis Insurance. It takes a horseman to understand, and C. Jarvis Insurance offers all types of coverage for your equine endeavors. That can be equine mortality, worldwide coverage, farm, ranch, and liability. They are a 4th generation insurance company in the equine industry, and so they're awesome, and we're so pleased that they sponsored today. And the last thing I wanted to close with is mark your calendars. Next month's webinar is going to be a really great complement to what we've talked about today. September, we are going to hear from John Walt Boatwright. He is with the American Farm Bureau Federation, and he's going to talk about labor and workforce challenges in the ag industry. We are really struggling right now. We don't have enough veterinarians. We're struggling with not having enough workers in farms or on the backstretch at tracks. And so we're going to talk about what that looks like and what are some of the things that are going on that might be a little bit of relief to helping us use guest worker visas and that kind of thing. And then Greg already talked about this, as did Anna and Colleen. A couple of other topics that we've got coming up are about internships. You'll hear about that in October and November. We are going to be talking about recruiting and retaining and developing talented staff members, because that's a hot topic these days. So with that, I want to thank Greg and Anna and Colleen, and thank you all for attending. And if I can be of any assistance or you have any questions, just reach out to me. We should have the recording up on the website in just a couple of days. We usually need to do just a little bit of editing to make it a little nice and clean. But other than that, it's out there for your use. So thank you so much for attending today. Have a great rest of your week.